Hey everyone, and a special shout out to all our UPSC folks tuning in. We're diving deep into the 2025-26 union budget today.
No.
And like always,
Yeah.
we're drawing all our insights from the Hindu's coverage.
The Hindu, always a good source.
It is.
Yeah,
This budget really sets the stage for the coming year.
for sure. And this year,
Especially,
it's particularly interesting.
it is because it's all about
Yeah,
trying to find a way to grow when globally the economy is facing challenges.
it is. Yeah.
So we're going to break down all that jargon and highlight the stuff that's super relevant for your UPSC prep.
Absolutely.
Who knows?
Yeah,
You might even find something that gives you an edge in prelims.
for sure.
But here's the thing.
Yeah.
The government, it seems like they're changing how they approach fiscal responsibility.
Interesting.
And it's stirring up a bit of a debate.
Well, one thing that jumps out right away is this projection of a 10.1% nominal GDP growth.
Oh yeah, that does sound pretty promising.
It does.
But for those of us who maybe aren't economists, could you break down what nominal means in this context?
Sure. So basically, nominal means it includes inflation.
Okay.
You get a clearer picture.
Yeah.
We need to look at real GDP growth that strips out the inflation part.
Right.
And the economic survey, they're saying that's probably going to be somewhere between 6.3% and 6.8%.
Interesting.
So
So the real growth is a bit lower than that headline number might suggest.
exactly.
You mentioned those global challenges earlier. What are some of the big ones, and how does this budget fit into the whole picture?
Well, globally, a lot of the major economies are slowing down,
Mm-hmm.
which of course has a knock-on effect on India
Yeah. Maybe
because we're all kind of interconnected in this globalized world. If you
Mhm.
look back,
yeah,
India's growth has actually been quite strong these past few years.
it has.
But this budget, it's predicting a bit of a slowdown in real terms.
Mm.
The big question is this projected growth enough? You know, especially if we want to reach that goal of becoming a developed economy,
Right.
because for that, we probably need real GDP growth closer to 8%.
So we need to step things up a bit.
Yeah.
The budget seems to be balancing ambition
Yeah.
with, like, being realistic.
Yeah, it is a delicate balance.
Now, one of the strategies they're talking about is capital expenditure.
Right.
Can you explain what that means for those of us who aren't, finance gurus?
Sure. Capital expenditure, it's basically when you invest in assets that'll give you benefits over a long time.
Okay.
So things like infrastructure, building roads and bridges, energy projects.
Okay.
But it's also investing in industries, making them more productive, creating jobs.
Right.
The idea is you spend this money, it creates a ripple effect throughout the economy.
Mm-hmm. Stimulating growth.
Exactly.
So it's about setting ourselves up for sustainable growth. But given these projections, and that we need stronger growth to become a developed nation, is this focus on capital expenditure, is it enough?
That's the big question, and it's something economists are debating.
Yeah.
Some say, yes, it's crucial, but maybe the budget isn't investing enough.
Right.
Others point out, well, maybe they should have done some of this stuff earlier for a bigger impact.
Interesting. That kind of nuanced analysis is super helpful for our UPSC folks.
It is.
When they're writing essays and having discussions.
Absolutely.
Let's move on to taxes now.
Okay.
This budget is pushing for a shift from indirect to direct taxes.
Right.
Can you explain what that means?
Sure, indirect taxes,
Yeah.
like the goods and services tax, GST.
Everyone knows GST.
Yeah, they're levied on consumption.
Okay.
Direct taxes are on income and profits.
Yeah.
So your personal income tax, corporate tax.
Okay, got it.
Generally, this move towards direct taxes is seen as a good thing.
Yeah.
It's seen as more progressive, meaning those who earn more, they contribute a bigger chunk.
Right. So a fairer system, potentially.
Potentially, yeah.
But here's where it gets interesting.
Yeah.
While we have this shift towards direct taxes,
Yeah.
the budget's saying that overall tax revenue growth is slowing down.
Great.
They're predicting a slowdown in GST growth, a dip in personal income tax growth.
Right.
And even though corporate income tax growth is expected to recover a bit,
Yeah.
it's still pretty low. What's going on there?
Well, it's important to look at what the budget's assuming, under the hood.
Yeah.
While moving towards direct taxes is good,
Mm-hmm.
we can't ignore that the global economy is slowing down.
Right.
That can affect how much companies make and therefore how much corporate tax they pay.
Yeah, makes sense.
And you've got new tax breaks that might be impacting personal income tax growth.
Okay.
So there's a lot going on.
It is complicated.
Yeah.
But it does raise the question, are the budget's assumptions about tax revenue, are they realistic given all this?
That's a very valid question.
Okay, so we've got this balancing act between structural changes and these external pressures.
Yeah, it's a complex picture.
Now, let's shift gears to tech. The budget mentions AI infrastructure,
Right.
and that's got to be crucial if India wants to compete with the big players, China and the U.S.
Absolutely. Especially with the U.S. pouring $500 billion into their AI plan.
Exactly. So this raises a big question, and it's a great one for our UPSC folks.
Yeah.
What specific AI investments does India need? What's holding our tech sector back? Is it research and development? Do we need more skilled people, better data centers?
Right.
Or is it the regulations that need tweaking?
All good questions.
Yeah, these are the kinds of things that can take your UPSC answers to the next level.
Absolutely. It's about looking beyond the headlines.
Right.
Understanding the specific challenges and opportunities.
Okay, so it's about getting into the details.
It is, yeah.
Now, let's talk about something that's been a bit controversial.
Yeah.
Fiscal transparency, or maybe the lack of it? First, a quick explanation for our listeners.
Go for it.
The fiscal deficit, that's the difference between how much the government spends and how much it earns.
Right. Like overspending on your credit card.
Exactly. And that's not good in the long run.
Not good at all.
The thing is, the last budget,
Yeah.
they had this plan to get the fiscal deficit below 4.5% of GDP by 2025-26.
Okay.
But this year's budget, it seems like they're moving away from that.
Interesting.
So they're changing course.
Yeah, and that's definitely raised some eyebrows.
What's the reasoning behind that?
Well, instead of the fiscal deficit,
Yeah.
they're emphasizing the debt-to-GDP ratio. It compares all the debt the country has to the size of the economy.
Yep.
Managing debt is important, for sure.
It is.
But this sudden change in focus is making some people nervous.
Right.
The budget actually lays out 3 scenarios for reducing debt.
Okay.
And each one depends on different assumptions about how fast the GDP will grow and how much the government's willing to cut spending or raise taxes.
So the path to reducing debt isn't so clear-cut anymore.
No, it's not.
It depends on a lot of things.
Yeah.
But why should the average person, or in this case our UPSC aspirants, care about all this?
Yeah.
What does this lack of fiscal transparency actually mean in the real world?
One big worry is something economists call crowding out. Imagine the government, they need to borrow a lot of money. So they go to the market and basically soak up all the available loan money.
Wow.
That leaves smaller businesses, the ones that create jobs and innovation, struggling to get the funds they need to grow.
So the government is hogging all the resources.
In a way, yeah.
And that hurts the smaller players.
Exactly.
So too much government borrowing could actually slow down the whole economy.
It's a real risk.
Now, how could a lack of clear targets impact India's credit rating?
Think of a country's credit rating as its financial report card on the world stage.
Okay.
It tells you how trustworthy a country is with money, how likely they are to pay back their debts. Just like people have credit scores that affect whether they can get a loan or not.
Right.
Countries have these credit ratings that affect their borrowing costs and how much money they can get from international lenders.
Okay. Makes sense.
So if India isn't clear about its fiscal goals, it can make lenders nervous.
And that could lead to a lower credit rating.
Exactly. And a lower rating means borrowing becomes more expensive.
Right, because lenders see it as more risky.
Exactly. They charge higher interest rates to compensate for that risk.
And that can create a vicious cycle, right?
It can.
Because higher borrowing costs strain the government's budget even more.
Yeah.
Which could lead to cuts in essential things like infrastructure, healthcare, education.
It's a domino effect.
It is.
And it can have really significant consequences.
This whole interplay between fiscal policy, credit ratings, the economy.
Yeah.
It's crucial for our UPSC folks to understand this.
Absolutely. It's not just about looking at individual numbers in isolation. It's about understanding the bigger picture, the context in which those numbers exist.
Okay, so it's about connecting the dots.
Exactly.
This has been a really insightful look at the 2025-26 budget,
Yeah, it has.
focusing on the things that are most relevant for our UPSC audience.
Absolutely.
We've covered growth projections, the changes in taxes, the need for AI investments, and of course, all the talk about fiscal transparency.
It's a lot to unpack.
But we're just getting started.
We are.
Stay tuned for the next parts of our deep dive.
Yeah, we'll be going even deeper into the details.
And there's more great stuff for your UPSC prep coming up.
Absolutely. And don't forget to check out The Hindu for their full coverage.
This is a great resource.
He is.
We'd love to hear your thanks on the budget so far. Share your takeaways, any questions you have, in the comments below.
We're eager to hear what you think.
Until next time, Keep those UPSC preparation gears turning.
Keep studying. Welcome back to our deep dive into India's 2025-26 union budget.
We've covered some of the big stuff already. Growth projections, those changes in the tax system, the need for AI,
Right.
and of course that whole fiscal transparency issue.
Can't forget that one.
But for our UPSC folks out there, it's the details that really matter.
Absolutely. The devil is in the details.
So let's dig into some of those specifics
Okay.
and see if we can extract some insights that might be helpful for those tough exams.
Sounds good.
We were talking about AI earlier.
Yeah.
It's a hot topic right now, definitely UPSC relevant.
It is.
But the budget mentions AI infrastructure without really getting into specifics.
Yeah, it's a bit vague.
So this is a chance for our UPSC folks to really shine,
Okay.
go beyond the surface level,
All right.
and show a deeper understanding.
How so?
Ask yourself, what kind of AI investments would actually benefit India?
Right.
Are we talking about research, attracting top talent, building data centers?
Yeah.
Or maybe it's the regulations that need to change to encourage innovation.
Those are all good points.
Yeah, these are the kinds of questions that can help you craft really good answers in your UPSC exams.
It's about showing you can think critically,
It's
not just repeating what you've read.
So it's about connecting the dots, understanding the whole ecosystem that drives AI development.
Yeah, not just throwing money at the problem.
Exactly. And we can't forget about the global picture here.
Right.
You've got the U.S. investing heavily in AI. China's a major player.
They are.
India needs to be strategic.
Absolutely.
Figure out where we can really excel, carve out our own space.
Find our niche.
Exactly. That kind of nuanced analysis is pure gold for UPSC.
It is.
Okay, let's switch back to that fiscal transparency issue for a moment.
Okay.
We were talking about how the government seems to be moving away from those clear fiscal deficit targets.
Yeah, they're definitely shifting gears.
And that's definitely raised some concerns.
It has.
Instead of focusing on the fiscal deficit, they're now emphasizing this debt-to-GDP ratio.
Right, which compares all the debt a country has to the size of its economy. Now, reducing debt is important.
Of course.
But this sudden change, without a clear plan, it's making people uneasy.
It's like changing the rules in the middle of the game.
It is, yeah.
The budget lays out those 3 scenarios for debt reduction, each with different growth assumptions.
And that's where things get a bit tricky.
How so?
These scenarios, they rely heavily on projections about how fast the GDP will grow.
Right.
And projections, well, they're not guarantees.
They're not.
If those growth estimates are too optimistic,
Yeah.
the whole debt reduction plan could fall apart.
So there's a lot of risk built into these projections.
There is.
It's a gamble on future growth.
Yeah,
And if that gamble doesn't pay off, the consequences could be pretty serious.
they could.
This is a great example for our UPSC folks, the kind of critical thinking that's expected.
Absolutely.
You need to be able to look at those assumptions
Yeah.
and think about what could happen if they're wrong.
Right. What are the risks?
What could go wrong?
And how would it affect the economy?
So it's not just about taking those projections at face value.
No, it's about digging deeper.
Okay, so let's dig a little deeper.
Let's do it.
What are some things that could derail those optimistic growth projections?
Well, the global economic slowdown is a big one.
Right.
If the U.S., China, those major economies,
Yeah.
if they keep struggling, it's going to impact India's growth.
Makes sense.
And then you've got domestic challenges.
Right, like inflation.
Yeah, inflation's still a concern.
Definitely.
And then there are always geopolitical risks.
Those are harder to predict.
Yeah, things like the conflict in Europe, that can create a lot of uncertainty.
And volatility.
Exactly.
So these are all factors that could throw those growth projections off track.
They could.
And if growth slows down,
Yeah,
those debt reduction targets might be really hard to hit.
they might.
It's a complicated web of domestic and global forces.
It is.
And our UPSC folks need to understand how it all fits together.
They do.
Now, let's play devil's advocate for a second. Let's say India does achieve those ambitious growth targets.
Yeah.
Would that be enough to solve the debt problem?
That's a great question.
It is.
Even with strong growth, reducing the debt to GDP ratio is a complex challenge.
Yeah.
It requires a few things.
Like what?
You need to control spending,
Right.
increase revenue, and make sure the money you borrow is being used well.
Not wasted.
Exactly. It needs to generate future growth.
So it's not just about growing the pie. It's about making sure the pie is being used wisely.
Exactly.
That brings us to fiscal discipline and accountability.
Right.
If the government shows they're serious about fiscal responsibility, setting clear targets, being transparent about spending, prioritizing investments that create long-term benefits,
Right.
that builds trust.
It does.
Trust with investors, credit rating agencies, and the public.
Absolutely.
And trust is essential for a stable and healthy economy.
It is.
This understanding of how fiscal policy impacts investor confidence. It's crucial for anyone who wants to be a policymaker or economic advisor.
And those are the folks we're talking to, right?
Exactly. Our UPSC aspirants,
Yeah.
let's revisit that crowding out effect,
Yeah.
just to remind our listeners what it is and why it matters.
Sure. So crowding out, it happens when the government needs money.
Yeah.
They borrow a lot from the market, soaking up all the available credit.
Right, like we were saying.
Yeah, so then it becomes harder for private companies to borrow money.
And more expensive.
Exactly. Which can stifle investment, expansion, job creation.
So it's like this competition for resources.
Is.
And with the government being such a big player,
Yeah.
private businesses, especially the smaller ones, they're at a disadvantage.
They are.
This is another area where our UPSC folks can really shine.
How so?
Analyze the potential consequences of this crowding out effect.
Right.
Think about how it might impact different sectors.
Mm-hmm.
What are the long-term implications for jobs and innovation?
Those are the kinds of questions that really show a deep understanding.
Okay, so we've got this lack of fiscal transparency,
Right.
reliance on optimistic growth projections,
Yeah.
and the risk of crowding out private investment.
Those are the big challenges.
So, what are the solutions? What can the government do to address these risks and create a more stable path?
That's the big question, isn't it?
It is.
And there's no easy answer.
Right.
But here are a few things that a lot of experts suggest.
Okay, let's hear them.
First and foremost, the government needs to get back to a clear fiscal framework.
Okay.
That means setting specific, achievable targets for reducing the fiscal deficit and the debt-to-GDP ratio.
Not just presenting a bunch of scenarios based on optimistic guesses.
Exactly. They need to show they're committed to fiscal discipline.
Right. Build that trust.
Yeah, it's about actions, not just words.
So, a clear roadmap, concrete actions.
Yeah, that's what investors and rating agencies want to see.
They want to be confident that the government has a plan.
They do.
Okay, what else?
Second, they need to improve how they spend money, prioritizing things that will create long-term growth and jobs.
Like infrastructure.
Exactly. Infrastructure, education, healthcare.
So it's not just about cutting spending. It's about spending smarter.
Exactly. Make sure those funds are going to the right places.
The areas that will create the most benefit.
Right.
And that also means cutting out wasteful spending.
Right, it does.
Tighten the belt.
Make sure every rupee counts.
Okay, what about revenue?
That's the third key point.
Okay.
They need to find ways to increase revenue without hurting the economy.
Right, that's a tough balance.
It is.
How do they do that?
Well, it could involve things like broadening the tax base,
Okay.
improving tax compliance.
Making sure people are paying their taxes?
Yeah, and exploring new sources of revenue.
So it's not just about spending less, it's also about earning more.
Exactly.
Expanding the pie so there's more to invest.
Right.
But like you said, it's a balancing act.
It is.
They need to make sure the tax policies are fair, but also that they don't discourage investment and entrepreneurship.
Absolutely. It's a delicate balance.
This is another area where our UPSC folks can really dive deep,
Right.
analyze different tax policies,
Mm-hmm.
think about their impact.
Consider the trade-offs.
It's about thinking critically and creatively.
Absolutely.
Okay, what's the final recommendation?
The fourth one is about creating a better environment for private investment.
Okay.
Remember that crowding out effect we talked about?
Yeah,
They need to address that.
right.
Create a level playing field for businesses.
Make it fair for everyone.
Exactly. Reduce the bureaucracy.
Make it easier to do business.
Yeah. And create a policy environment that's stable and predictable.
So businesses feel confident to invest.
Exactly. They need to know the rules aren't going to change constantly.
That makes sense.
This means improving infrastructure, strengthening the legal system, promoting competition.
So creating a positive feedback loop?
You could say that, Lef.
Private investment drives growth, which creates more revenue for the government to invest in public services.
Exactly. It's a win-win.
This whole analysis of crowding out and the need for private investment,
Yeah.
it's super valuable for UPSC, especially when you're asked to come up with policy recommendations.
It is.
It's not just about understanding the theory, it's about applying it to real-world situations. It is.
And coming up with practical solutions.
Exactly. UPSC is all about connecting those dots, analyzing different perspectives.
Absolutely.
This budget is a perfect case study.
It is.
It's this complex web of interconnected issues.
Yeah.
And our aspiring policymakers need to be able to see how it all fits together.
They do.
This has been a really insightful discussion.
It has.
We've gotten into the details of growth projections, fiscal transparency, the crowding out effect, and the importance of private investment.
We've covered a lot of ground.
But there's always more to explore, right?
There is.
In the next part of our deep dive,
Yeah.
we're going to look at another crucial aspect of the budget,
Okay.
one that's particularly relevant for UPSC,
What's that?
its impact on India's credit rating.
Ah, yeah.
We'll discuss how those international rating agencies view India's fiscal health
Right.
and what the government can do to maintain a good credit rating.
Which is essential for attracting investment and keeping borrowing costs low.
Exactly.
So make sure you join us for the final part of our deep dive.
We'll tie everything together
Yeah,
and provide those key takeaways that could give our UPSC folks an edge in their exam.
absolutely. And don't forget to check out the Hindu's analysis.
It's a great resource.
It is.
We'll be back soon to unravel those credit rating mysteries.
Looking forward to it.
Until then, keep those UPSC preparation gears turning. All right, welcome back to the deep dive. We're wrapping up our exploration of India's 2025-26 Union Budget.
The final chapter.
And today, we're tackling something that might seem a bit technical, but it's super important.
Yeah, credit ratings.
It has huge implications for India's economic future, so bear with us.
For our UPSC folks, this is key. You got to understand how this stuff works.
Absolutely.
Think of it this way.
Okay.
Just like we have credit scores, right?
Yeah.
It tells lenders how risky it is to loan us money.
Right.
Well, countries have credit ratings too.
So it's like a country's financial report card.
Exactly. It shows the world how credible they are.
Okay. And who gives out these ratings?
Big international agencies
Yeah.
like Moody's, S&P Global Ratings, Fitch.
Big names.
Yeah, they look at a bunch of stuff.
Okay.
But a country's fiscal health is really important.
That makes sense.
Things like debt levels, budget deficits, and that fiscal transparency we keep talking about.
So a good credit rating means lenders are more likely to give you money.
Exactly. And at better interest rates.
So it's like getting a good deal on a loan.
It is. Lowers your costs,
Right.
gives you more flexibility.
But what happens if a country's credit rating takes a hit? What does a downgrade actually mean?
Well, that's when things can get tricky.
Okay.
Lenders get nervous, see the country as more risky. They charge higher interest rates to offset that risk.
So it becomes more expensive for the government to borrow.
Exactly.
And that can have ripple effects throughout the whole economy.
It can.
Higher interest rates for everyone, slower growth.
Makes it harder to fund things like healthcare and education.
It's a chain reaction.
Yeah.
So let's bring this back to the 2025-26 budget.
Okay.
We talked about those concerns with transparency.
Yeah.
Shifting away from clear deficit targets,
Right.
relying on optimistic growth.
All of that.
How does all of that affect India's credit rating?
Remember, those rating agencies are watching.
They are.
They want to see commitment to responsible fiscal management.
Okay.
And when they see a budget that's, a bit vague on those deficit targets, relying on maybe overly optimistic growth, changing focus without a clear plan,
Yeah.
it raises some eyebrows.
So our concerns about transparency, they could actually impact India's creditworthiness.
They could.
That's a bit worrying.
It's a real risk.
If those agencies start doubting India's commitment, they might downgrade the rating,
And then it becomes more expensive to borrow.
which can hurt the economy.
Exactly.
This link between fiscal policy and credit ratings is something our UPSC folks should really grasp.
It is.
It shows how decisions made here can have big effects globally,
Absolutely.
affects our ability to attract foreign investment.
All of that.
And it's worth noting,
Yeah,
India's credit rating is already under some pressure,
it is.
which is a notch above junk status.
So even a small downgrade could be a big deal.
That's not good.
Not ideal.
So what can the government do? How do they reassure those rating agencies?
Well, the first thing is to get back to a clear fiscal framework.
Okay, we've talked about that.
Specific, achievable targets for reducing the deficit and the debt-to-GDP ratio.
No more vague promises.
Exactly. They need a plan, be transparent about how they'll get there.
Show they're serious.
Yeah, actions speak louder than words.
Okay, what else can they do?
They need to improve how they're spending money. Focus on things that will create growth in the long term.
Like infrastructure, education, things like that.
Exactly. And cut back on wasteful spending. Be more efficient.
So spend smarter, not just less.
Exactly. Make sure every rupee is working towards those goals.
And we can't forget about revenue.
No, we can't.
Need to find ways to increase that without hurting the economy.
Right. Broaden the tax base, improve compliance, maybe explore some new sources of revenue.
Tough balance.
It is.
But crucial.
Absolutely.
This whole interplay between spending, revenue, and debt, it's complex. But our UPSC folks, they need to get it.
It's all connected.
It is.
It shows how these economic policies actually work in the real world.
And how they affect people's lives.
Exactly.
So we've come full circle.
We are.
We started with those growth projections, explored the fiscal landscape.
Yeah.
And now we've landed on credit ratings and India's global standing.
It's a journey.
It is. And we hope this has given our UPSC folks some valuable insights.
It's about more than just memorizing numbers. It's about understanding how it all works together.
And for those who want to go even deeper,
Yeah.
the Hindu's coverage is a great resource.
It is. Lots of great info and analysis.
We'd love to hear your thoughts on the budget.
Yeah. What are your takeaways? Anything you'd like us to explore further?
Share your thoughts in the comments.
Let's keep the conversation going.
Keep those UPSC preparation gears turning. Best of luck on your journey.
You got this.
Happy studying, everyone.